Hi guys, and in today's video we're looking at Natwest. Is Natwest a buy or a sell? Let's have a look. Firstly, I used to work at Natwest last year and I helped them achieve some record results, profits. Excuse me. Not happy with them. Hi guys, and in this video we're looking at Natwest. Is it a buy or a sell? Firstly, I used to work at Natwest and I helped them to increase their profits to 4 billion last year. I worked in the loans department, loans and credit cards, which was the best performing segment within Natwest. Let's have a quick look at some of the fundamentals. First, let's look at the charts and then we'll look at fundamentals. I recommended it verbally in about October. When it, I don't know if it was right here or it was here, whatever. It was quite cheap, about 200, 240. I think 240 is when I recommended it. So I thought the dividend was really high back then. And my friend said he didn't want to take the risk. I said to him, why don't we put 10 grand in it, like 240? And he said, anything can happen. Of course, anything can happen. And it's gone up like 20, 30% or whatever it is. In the last few months. Anyway, what about now? Let's talk about now. Got a market cap of 28 billion. I don't know why it says a PE of 12. I think that's not correct because they made 4 billion last year. And if they're valued at less than 30, in my book, that's about 7. So 7 times current earnings. And a healthy capitalization. It's not a small stock. It's kind of on an interesting trend. It's kind of back as it was about 5 years ago, but it's a bigger bank to a certain extent. It's doing more things. Let's look at the dividend history. Well, in 2017, they didn't do anything. And then it was 13p in 2018, sorry. They're getting up to a same kind of dividend cover. So if profits go up, the dividend could increase as well. That's a big if. Let's look at the factors behind whether it's going to go up or not. We've got a few people downgrading it. I don't really listen to other people's analysis. I like to do my own analysis. You know why? I'm more right than wrong. And that's, if you watch my channel and if you've looked at my investment ideas over the last 15 years, you'll see that as well. Okay, banking, Natwest, could they go up or down? Let's think about this. Most of their profit comes from their loan book. Loans are tied to interest rates. Interest rates have gone up, as I predicted in 2020, 2021, and 2022 accurately. I fortunately fixed 3 of my own mortgages. I hope you did the same. I hope you watch my channel and listen to some of my friendly recommendations, although I'm not a financial advisor. What's going to happen to Natwest, though? Natwest, I think, when I spoke to people at Natwest, when I was working there, I raised this very point. Could we make more money as a bank if interest rates rose? Would people take out as many loans and mortgages? And the answer I got back was when interest rates go up, profit goes up because more people are able to service debt than default on debts. Debt defaults or loan losses is when somebody can't pay back a loan or can't pay back a mortgage and the bank has to sell on that debt at a loss. So if we have a big recession, I think we're going to. If we're going to have a big mortgage crash, I think we're going to housing crash, there will be people defaulting, but I think the vast majority of people will be able to service their mortgages. Why do I think that? I think that because, let's move these newspapers, I don't like them in the shot. I think the reason why most people are going to be able to service their mortgages is because most people, if you think about the UK, 60 odd million, I don't know what it is now, maybe 65 million, lots of people in the country, the vast majority don't live in London and the Southwest. The vast majority live above London, in the Midlands, in the north of England, in Scotland. Remember, Natwest is part of a bigger group which covers mortgages also in Scotland and Wales. Although The Royal Bank of Scotland also has some share of that. Of course, NatWest owns the Royal Bank of Scotland as well. So if we think about all the mortgages in the UK, I think the vast majority are going to be outside of London and the southeast and southwest, which is where I think the mortgage risk lies. People that are, for example, having mortgages rates go from 3% and they're having to remortgage at 4 or 5% in the north, where you can get properties for 200,000 versus in London where they're 700,000. That's a very big difference. Even if people take on a second job in London, they might not be able to service their mortgages if they bought within the last few years, and if they're not a lawyer, doctor, banker, very successful businessman, etc. So where does that leave with my analysis? Remember, I'm not a financial advisor. I just use financial logic. And I think that NatWest, on the fundamentals, is probably going to do quite well over the next 4 or 5 years. Yes, loan losses are going to increase, but I think overall profits from banking are going to increase because of the vast majority of people are going to be able to service their debts. And I think that's more likely than not. Is it certain? What's certain in life? Probably not a lot. But I think it's quite likely. Do I think that the market will believe this? Probably not. The market doesn't ever listen to what I say, of course. But in the past, a lot of things, I kind of have a feeling of what's going to happen. But the thing that I don't always know is when. So, for example, when I bought Barratt Developments, which is one of the largest house builders in the UK, I looked at it and I wanted to buy it 60p, but I waited until 100p. I think it's now 600p. By the by, I never know when things are going to happen, but I have some inkling of what could happen. You can check my other predictions. I like making predictions. Anyway, what's going to happen with NatWest? I think it's going to do well. Is the share going to go up in the next year or not? I don't know. But I think it's a healthy dividend. It's about 4% at the moment. If profits go up as a percentage of dividend cover, which is how much cash is in the bank to cover the dividend, the dividend could go up. Indeed, it was 13p back in 2018. So if that becomes 15p, then we're looking at 5-6%, on the current price, which I think is pretty good. Had we bought it when I recommended, my friends in October about 240, we'd have an even bigger dividend yield. What's a play to get exposure to this? Well, I think what would be interesting is maybe an option. Maybe a long dated option for like a year, or something like that, because I think it could be quite cheap to kind of have a strike price around 300, and if it goes up to 320 or 330, then the option price will go up quite dramatically. But if you just bought the underlying equity, then you'd only get 10% return. I think there is some downside risk here. The market might be concerned about defaults and about a mortgage crisis, which is likely to happen this year in 2023 and 2024. So there's some risk to the actual share price going down. If you are kind of interested in kind of different styles of investing, then there is something I think called a straddle, where you can buy an option and where you think it's going to go up, which is a call option, at the same time as buying a put option where you think the price is going to go down. And in that case, if the price does go down or higher by a margin, let's say it goes up 20% and it's up to either 360, or goes down 20%. So it goes down to about, I don't know what that is, 250, 240, whatever. Then you would make money either way, because that's one way of playing this. The other way of playing this is a long-term trade, where you just buy it now and hold it for 5 years. I mean, if we look at the 10-year graph, it's even not as high as it was in 2013 at about 400 pence. what's the long-term future of NatWest? I think it's probably going to be buying other fintechs. It bought a fintech recently when I was working there, and I would imagine it's going to innovate and try to innovate itself, but it is quite slow to innovate and buy other fintechs. So I think it's going to stick around. I don't know what it's going to do in the next 10 years, but I do think it's likely either to go up quite a bit in the next maybe year or two, or the market sentiment means that it pushes it down, or indeed my analysis could be wrong and the loan losses are higher than I expect. I expect loan losses to be kind of 10, 20%, but I think the overall profit of the portfolio of the bank will rise. Either way, as I mentioned, the other option is to buy a straddle, where you buy a call option and a put option. So even if it does go down by a lot, you'll have made you'll have made a lot of money. So it pays for the cost of the call option. There are two ways to play the NatWest trade. That's why I think it's kind of interesting. It could go either way. Hope you like this video. Like and subscribe. I do videos all about investing, including listed stocks and angel investing. I've been investing since about 2007. I own a couple of properties and stuff like that. Anyway, I hope you enjoy the channel. Take care. Check out my other videos as well. Peace.